Hi, this is Randy Finney with Right Side of the Chart, and today is Friday, November 5th, 2021. I wanted to do a quick update before the end of the week here. Not a whole lot new to report, but there are some things I want to point out. Definitely some developments worth noting. So this will be a relatively brief video. I'm going to start out here with QQQ. That's really where my focus lies until these FAANG stocks break. That's the market's going to continue to go up, and they break. If the Nasdaq 100 breaks, the S&P 500 breaks because they're all the same top holdings: Microsoft, Apple, Amazon, Tesla, Facebook, and the like. So nothing's changed on my outlook. We have this 60-minute rising wedge. This is the first time in a while on the indexes I've seen what I believe will prove to be a wedge overshoot. And again, it's just a pattern I've noted over the years, and they pretty impulsive once they kick in. You know, they don't meander around. You don't back test the wedge a lot, like a big bounce or anything in a second run up. It's either this, in that, or you don't have a wedge overthrow. It's just something else. So that's what I think we're going to have, and we're starting to get a little bit of selling now today. Nothing major. Again, we're flat. We're down 0.11%, but when you look at the 1-minute chart, you can see, nice fade so far of today's rally to turn it negative. But again, a lot of work to be done to firm that up, namely a break below the trend line. So as I've been saying since here, next sell signal remains break at the 60-minute trend line on QQQ, as well as the Nasdaq 100 futures. Obviously, it's the same trend line right here. There's a little micro divergent high. I mean, it's the same big divergence that's been building. You can just go like this, have the prices making the higher highs here. So that's technically your divergence line. I just left that one in place because of the wedge. And back to QQQ. So that's it. And to be continued next week. There's an hour and a half to go, so you'd have to have a pretty big sizable drop. And again, not just a drop down to that trend line or a marginal break, but a pretty impulsive break. So I think if it's going to happen, it's going to happen next week. I do think it will happen, and I think it'll happen next week, and it'll probably, let's see what happens at the end of the day today at the close. But next week, if we get some follow through downside, a big gap below that trend line would be ideal. I love gaps for a bullish or bearish setup. When you have a bullish chart pattern, whatever type it is, you gap up. What it does, it denies a lot of the wannabe longs an objective entry, and it also catches a lot of shorts off guard that have stayed too long in the trend, and then they wait for a reaction that usually never comes. So it's those gap downs that can really, if you get it, really lead to some impulsive selling before the first decent bounce. And so there it is. Targets remain. You can see them there: 382.64, 378.44. I've already covered those. And again, those are actual resistance or support levels. You want to cover a little bit below that, whatever your preferred target or targets are. And remember, this is 60-minute chart. This kind of tells the near direction. I'm going to jump all the way out to the monthly chart, and then we'll move on. So what you see here are 3 indicators down below. I'm going to park these two. This one here, I'll park the RSI for a second here and look at the PPO. And mentioned this in the past. You have the PPO histogram down below here. I'm going to try to do this so it's not so squeezed. Here, I'll have to roll it out. What I'm looking at here and wanted to show you is these red crossovers. So when you get these hills, it's pretty clear. Sometimes you start going down, but when these hills start to approach the zero line, the white line there, they usually cross. Sometimes it happens pretty quick, and sometimes it's a gradual stair-stepping down. But and I didn't measure this one, but you can see here, I've covered this before, that each and every one of these, this one was small, but they're all associated with the biggest drops in the market. There was that one was associated with about a 31% drop. This one about a 24% drop. This one here was followed by a roughly 26% drop in QQQ. There was a little flash crash in there back in 2015. I remember it well. A couple there that really resulted in corrections, probably high single digits, maybe low double digits. That one 55%, and so forth and so on, guys. I could just go on and on. So where we're at, again, we're there. We're very close. Sometimes you get close, there's a little bounce, but again, this is a monthly indicator. This cannot and will not trigger a definitive signal until the end of this month. However, what I'm doing is kind of looking ahead. If we get the breakdown on that 60-minute chart and it leads to a decent correction, still, a little more than 3 weeks ago in the month, but that does have the potential to then trigger this longer term fairly reliable sell signal. Again, you can replicate it on your own chart, go back for decades, and you're not going to see a lot of whipsaws. So that's food for thought. And until then, we remain in an uptrend. And I'm just going to hit a few of the FAANGs since it's going to be a short video. Microsoft, I have this little minor trend line there in the primary uptrend line. By the way, 60-minute chart, not a big long-term time frame, short-term, but we just broke that. So that's probably going to bring us back next week to the larger trend line if this breakdown sticks. What I mean by that, well, 60-minute candle, we need to finalize it, but you have the negative divergence and all that, so I think you're looking at least a tradable pullback of about 3%, almost 3% in Microsoft at minimum, maybe down here at about 322. Apple, same thing, like Microsoft, which just put in a divergent high. Apple put one in here. I have it drawn as a megaphone pattern, but just focus on the divergence. And you're at support right now, about 150.35. So if Apple breaks that, if Microsoft plays out a move down to that trend line, that 3% or so drop, Apple will most likely do the same. These guys are highly correlated. That'd be about a 2% drop in Apple. So just little stuff, but if it plays out next week early on, remember that little break of minor support, which many will view at the time as just a little pullback, will most likely give us that sell signal in the Qs and QQQ, and then put us on a swing short position, a trade that can last for weeks, maybe even months. And here's Alphabet, same story. You can see we're just diverging. A lot of these FAANGs are diverging here on the 60-minute charts, and doesn't have to mean a major top. You get a little divergence here, and you get these tradable pullbacks. There was the last divergent high, and that was a good 6% drop right there in Alphabet. You had a divergent high right here where my cursor is. I need to move to the side of it so I don't move that trend line. Grabbed a little high, so I'll stop a little shy here. About a 10% drop. So there it is. Your last two divergent highs, 10%, and what did I say, 5% or so. And this one, come back in. You can see some targets here, and then that back test of that trend line. So a lot of similarities with most of these FAANG stocks. Not Amazon. Amazon does have some divergence on the RSI, but not on the PPO right now. And then Tesla certainly has some divergence. Tesla's gotten a little ahead of itself lately. You have a trend line here, 60-minute chart, divergent high right here. There's your negative divergence, breakdown back test. So this is probably what we'll see next week, I would guess. And target would be somewhere around probably a pullback to that trend line. There's a gap right here, so somewhere in there. That actually, I'd have to give you additional targets. I just wanted to show you the posture of all these stocks. That it's certainly looks like a good chance we're going to finally get some sell signals next week. Before I move into commodities and treasuries and gold, I just want to update. This one stood out to me today. I was scouring through the charts earlier, and PINS, Pinterest, has a nice divergent low right here. It's up nothing big for this stock, that is. There's been a lot of movement in it lately. Who was it? PayPal was talking about acquiring them and then backed out. So then the stock ran up on the news, then collapsed after they pulled out or decided against it. I haven't followed it closely, but that's the last I heard. And now I think it was an overreaction, because here's where it was before it got run up on the news, and then you can see it drop down to below where it was. And again, just some potential divergence, not confirmed. One to watch next week. I'll follow up on it next week. Maybe these are old trend lines and support and resistance lines. I just added the divergence lines today, so if the market holds up, I'll follow up. But if the market doesn't hold up, you're probably going to see this one go down. It's in the Nasdaq composite. It might be in the Nasdaq 100 as well. The Nasdaq 100 is just the largest 100 companies in there. Composite has a lot more. All right, let's move on. Let's hit crude oil real quick. Nothing much to update there. Sell signal still in play. Still expect more downside. This was our primary trend line. There was our divergent highs. 120-minute chart we're looking at. So there was your breakdown, back test, move lower, hit my 78.90 target. So we've hit both targets first two support levels, 80.75 and 78.90. Bounce from there as expected on the initial tag, and we should see a thrust down next week to that next target there, about 75.72. Right now, that's the final target I have, but I will most likely be adding more depending on what I see in the charts, of course, of crude oil, the equity markets. And let me just throw in, as I'm looking at the chart here, just in case I don't do an update and things get crazy next week, and we start out with a big down move in oil early on. Let me just give you, I'd say somewhere about right here is possible fourth target, but right now I'm maintaining this 75.72 is my preferred swing target. I think we'll get most likely get a reaction if and when we get there. That's crude oil. What else did I want to cover here? Oh, let's cover the metals. Look at euro first. We'll start there. There's that spike. This is I actually prefer to see this. That's that false breakdown, aka flush out move, fake down, bear trap, whatever you want to call it. But remember, we've had 1, 2, 3, 4, and now, well, that one went through there, but we're back above there. So what it did is only extended the divergence. So that from that aspect, we put in this divergent low, extended the divergence on the RSI, put in divergence on the PPO down here, and we moved back above it. So breakdown on face value is bearish, and there are undoubtedly, I'm sure, some euro bears that shorted the euro or went long the dollar, but the fact that it snapped back above there at this point in time is bullish. Now, the further we get away from there, the more bullish it becomes, because those that shorted or are currently short the euro, maybe they were short before, start to feel the pain, start to go underwater, and they start to cover. And so these are the these were the targets before. I haven't changed anything on this chart. They're still the next targets on the way up if you want to go long the euro here today. And I will say that it is an objective long entry, even though we're heading into a weekend. I'll let you make that decision, but it's an objective long entry because we had the breakdown and now the recovery. So what I mean by that, it would not have been objective to short the breakdown unless you're just very, being a little bit aggressive and anticipating that it would prove to be a false breakdown, if you follow me. Now, that would have been aggressive, but it is objective once that breakdown level, that support is recovered. So in other words, the euro is trading back above support, and so you're buying it here, and you're also buying it after that false breakdown if you want to go long. And again, I'm still favoring a move up here, at least to that 117.90 level, and quite possibly more. We'll see. Again, what the euro does will almost certainly impact gold and silver. Speaking of which, this is what I wanted to see. This is what I've been talking about. We put in the divergent high, and we broke down. We corrected, and we had a breakdown of the 60-minute trend line. We back tested once, back tested again, but look, now we're back above it. Not by a whole lot, and I'm going to zoom in real quick and show you, but all in all, that's nothing but bullish, because it's showing the buyer stepped in pretty early. That was a correction in gold, but not very much, especially not, you put in a divergent high, and in a bear trend, you would expect that to be the catalyst for the next leg down, new lows. And that's not the case. Right now, we still have a series of higher highs and higher lows, i.e. an uptrend in gold. And now you can see we're right about that previous reaction high from right here, a little bit above that one there. And so if we can power on through there, that should open the door for a move up to my next target of 1838 or so right there. And then that's a big level if and when that breaks out. So this is what I'm looking at in gold, something like this, and ultimately a breakout, and pretty powerful rally if we get it. All right, next up would be silver. Silver is going to move with gold usually, and same thing, little divergent high, hit my 24,867 target recently. Had a correction from there, but nothing big. Held perfectly right on that $23 support. It was resistance back here. We had this inverse, similar to an inverse, somewhat like an inverse head and shoulders pattern, broke out, back tested there. And anyways, we corrected, let the divergences play out, and they didn't play out for that much so far. Now, again, time will tell. Maybe this is just a little snapback rally, and we're going to have another leg down and then another one. And then, well, then the downtrend continues. But as of now, we're still above this downtrend line, the primary downtrend line. We broke out right there. Remember, we had a minor trend line there, which we broke out first. And again, like gold, although not a, perfectly clear uptrend, that's what this is. We're still making a series of higher lows right now, and once we make a higher high by taking out that 25-ish resistance, then that's going to confirm that we're in most likely the early stages of a new, at least intermediate term uptrend in silver. And last but not least, just a quick update on the 5-year Treasury note. That is ZF futures. Closest ETF out there would probably be IEF, which is a 7 to 10 year Treasury. And we hit, I gave you an update actually, a screenshot of this chart earlier. That 122, 144 level, we hit it. We've been trading at it all day. So far a reaction, more so in the form of a consolidation. We have small little potential divergence, but it's not confirmed. Why? Because these indicators are pointing higher and they could continue up, but we're getting a little stretch, and it's a pretty decent resistance level. So, now whether we get a reaction here or not is likely to depend on what the market does. Because if the stock market gaps down next week, on Monday, and or dumps into the close today and then gaps down, and let's say we have a big down day, 1-2%, whatever it is, typically that's going to cause a flight to safety into Treasuries, so we can continue on through there. But if the market holds up, now again, there's been a disconnect between what Treasuries should be doing and are actually doing. The Fed has had an extremely heavy hand in the market. They're starting to reduce their their bond purchases. But either way, a lot of that's already been anticipated and priced into the market. I just want to say that that's it. Let's not overthink it here. We're at resistance. You can take profits if that's your thing. It's a nice move if you trade futures. They're leveraged enough, even though it wasn't a huge move in percentage gains. It's a decent move in Treasuries. And if not, hold out. There's a good chance we'll probably work our way up to that 123.071 level in time, whether we have a reaction first or not. So those are your levels. And remember, this is part of the case for that short was FVX X X. This is the 5-year Treasury yield, and remember we had some pretty good resistance right here at about the 1297 level. That's almost 13, and we came right up to it, a hair under it, but close enough that should be it. And we also had back tested this trend line since, and you can see where we're at today. We're coming down, and we're just a hair below this uptrend line right here from the August 4th lows. And so I still think whether we have a little snapback first in yields, remember this is opposite. These are the yields of the 5 years, so this moves inversely to the bond prices. So if we have a kick up in yields, then the CF would probably go down and have a reaction there. Otherwise, we can blast right on through that resistance level and continue down lower and hit that 920 level. All right, that's it, and that's where I think we'll probably head over in the next in the coming weeks here. Nothing much else. I'm not going to do an update on. I'll do it just to get out of the way in case anyone wonders. But we hit the suggested stop on YTEN. That was a trade idea yesterday. It was a quick hit. We hit our first target, and that's all it's going to be for now because I had a suggested stop around 650, and so we went up. Could have took quick profits. And if you recycled in whether or not, I said down to, but not below 7, and that's what we did when we went below 7. So really, it could pop again. Watch it, and if it pops again, and same targets as before. But as of now, since it went down below 650, I think that was a in and out hit and run trade, and so I won't follow up with any updates unless it pops that level again and starts the run. Then I will update it. Alrighty, this has been Randy Finney with Right Side of the Chart. Have a great weekend.